This week, COVID-19 exploded across the country. Daily new cases hit record highs with each passing day. Hospitalizations surged to a new peak. State and local governments reimposed restrictive measures. And now, Americans are stocking up on pantry supplies yet again. Plus, DoorDash is racing to the New York Stock Exchange. The hot food delivery company filed its IPO paperwork today, and we've got the numbers. And finally, while locked down in quarantine, many people found companionship via a new pet, turning the dog days of the pandemic into a booming business and pet stocks into Wall Street winners. I'm MacKenzie Sigalos, and this is CNBC After Hours. It was a mixed week on Wall Street, as the Dow and S&P 500 posted gains, while the Nasdaq Composite finished in the red. The gap in performance can be explained by what finance pros call a rotation, meaning when investor consensus shifts from one group of stocks to another, and people rotate their exposure from group to group. In English, for months, investors loaded up on what we've been calling stay-at-home stocks, the ones that are best positioned to do well under pandemic conditions. And a lot of those are technology stocks, which are heavily weighted in the Nasdaq Composite. So after we learned on Monday that pharmaceutical company Pfizer has a vaccine that's 90% effective, the rules of the economy changed. There's light at the end of the tunnel, and investors rotated from those high-growth tech names into other companies that are set to perform well once everything opens up. They're looking over the valley of the coronavirus and into the spring and summer, expecting life to look a bit more normal. But it's going to be a very rough few months before we get there. The COVID-19 outbreak is growing in the U.S. We reported more than 150,000 new cases, yet another record high. Hospitalizations and deaths are rising as well, and states and cities are once again imposing movement restrictions in efforts to curb the spread of the virus. Just today, the governor of Oregon issued an order for a partial 2-week lockdown. Gym workouts and restaurant dining have to stop, and social gatherings in that state are capped at 6 people. The mayor of New York City also told WNYC that schools could close as soon as Monday. This all sounds scarily similar to the first few weeks of March, and just like in early spring, Americans are hitting grocery stores to once again load up on pantry staples and household goods. The question is, though, are the suppliers and grocers better prepared for the second wave of stocking up? CNBC's Sara Eisen can explain.
As the COVID cases have risen lately, and so have local restrictions, we are seeing people go out and stocking up. However, the numbers are nowhere near as extreme as we saw this past spring, end of March, early April. But it is a trend worth watching. We've seen in the last few weeks, toilet paper sales, for instance, rise more than 20% from last year. Paper towel sales up 27%, also double-digit increases for things like frozen food. So people are stocking up, but keep in mind, we're at the beginning of the holiday season, 2 weeks till Thanksgiving. Normally it's a period where people cook, bake, and spend a little more time at home. So if you layer that with the rising COVID cases and some new restrictions, we're seeing it a little more this year. I will just note, though, there's a risk this time that did not happen in the spring, which is worth watching, and that is the COVID cases in this country are much more widespread across the nation and do include key parts of America's breadbasket, which is where those food plants really are. General Mills, for instance, has its 2 biggest plants in Iowa and Tennessee. They both are infection hotspots. So far, General Mills tells us they've been able to keep the factories open. However, it's worth watching. The suppliers we talk to, food companies and makers of household products, are much better prepared this time around for the surge in demand. For 2 key reasons. Number one, from a health and safety perspective, they're able to follow the new guidelines, knowing to social distance in some of the food plants, knowing to strategically test people. For instance, we talked to Tyson Foods. They were at the center of the meat shortage back in the spring, had to close some plants because of a spread of cases in their plants and even deaths. They say they have invested hundreds of millions of dollars in safety precautions, including a chief medical officer for the company, so that it does not happen again. Tyson says it is prepared for another wave of the virus. So it's safety, and it's also ramped manufacturing. The rising food prices really haven't impacted the rise in consumer spending for food and basics. And analysts point to a number of reasons why. Number one, we're not spending as much going out to eat at restaurants, traveling, services that we would normally do. So a lot of that money does get redirected into the home, buying groceries and buying household products. The other factor is many analysts don't expect the spike in food prices we've seen in some categories to last very long, because overall we're still in a pretty weak economy and a weak demand period. Also, some of those price increases had to do with shortages. Meat, for instance, saw among the biggest gains in prices because there was actually a bit of a shortage as they had to close meat plants in the spring because of rising COVID cases. That is likely to be temporary as those plants have reopened and the factories feel more confident that they can meet rising consumer demand.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
Right now we have a fire blazing, and to me, traveling and spending time with people over the holidays is sort of like pouring gasoline on a fire. It's just not a good idea in the middle of a pandemic.
Make no mistake about it, the White House is still engaged in this discussion. We know that the President Trump, the way that he operates, and you are absolutely correct. The President's numbers and Speaker Pelosi's numbers were pretty close before the election.
A lot of people have employees not just in one physical location, or can't fit everybody in one physical room. And so you're going to want to broadcast to that whole group kind of forevermore.
We have a lot of new states just, starting last year, starting in NFL season 2019, we had 2 states that we offered online sports betting in. We're up to 10 now. So that's made a big difference.
As Americans across the country prepare to hunker down at home for the next few months and spend the holidays without their friends, many will be doing so with man's best friend instead. The pet business has been a major winner of the so-called stay-at-home economy. Just look at the Google search traffic for the phrase "buy a puppy." It absolutely exploded in the middle of March and has remained high in recent months. And check out some of these numbers. Sales of dog leashes are up 15% in the 9 months ending November 7th, compared to the same period in 2019. Pet toys, up 19%. Grooming supplies, those sales rose 21%. And sales of dog diapers are surging, up more than 200% compared to 2019. Chewy, the online pet product company, has been on a tear this year. The stock has more than doubled in 2020, and one bank says those shares can rise about 40% higher. Analysts at Wall Street firm Piper Sandler put out a note today recommending the stock as a buy to clients. They say that the market for pet food, toys, and accessories has grown to a $120 billion industry this year. And now, other companies want a piece of the action. CNBC.com's Melissa Repko has all the details on how retailers are trying to cash in on the booming pet business.
As people spend more time at home, they've seen it as an opportunity to take in a new pet or maybe get their first pet because they're working remotely. They're able to walk a dog, they're able to housebreak a puppy, and they also look for companionship. While we've been hearing and seeing a lot of chatter about pet adoptions in recent months, the reality is that pet spending has been going up over the years for a number of different reasons. And one of them is demographics. People have been putting off having children, and so if they have a child a little bit later, that may inspire them to get a pet instead and treat that pet as a family member. So as people think more about what they're eating, they're also thinking about what their pet's eating, for example, and that's driving the desire to spend more on pet food, like buying fresh pet food or buying organic pet food. And of course, that means more money ultimately for retailers who are selling those different kinds of products. There's also some pandemic trends that could benefit the pet market long term. During this time period, we've seen a shift in the real estate market to more suburban and rural areas. And when you have a backyard or even a front yard, you may have more space for an additional pet, but you also may finally decide to get multiple pets or, take the plunge that you'd been putting off for a while because you didn't have the room for an animal. I've spoken to different retailers like PetSmart and Walmart, and they've seen indicators that people are getting new pets. For example, a lot of people are buying supplies they need when they get a new pet. Think like a dog crate or a pet bed, or even people who are getting new reptiles are getting these kits that you can buy from pet stores that help you understand what does your reptile need, what temperature, what kinds of food. For specialty pets, it can be a little bit more complicated. And so they're seeing indicators of new pet ownership. There are also the big box players like Walmart and Target that sell a lot of dog food and have other dog supplies and accessories. And then there are new players or newer players like e-commerce companies like Chewy that have been competing. And they're all trying to make their service stickier by offering more and more in different ways. So during the pandemic, for example, Chewy has sped along the rollout of telehealth, which allows customers that buy from Chewy to consult with a vet about common concerns about their pets. On the other hand, we've had Walmart add two different services. It's now selling pet insurance through another company, and it's also connecting pet owners to pet services like dog walking with Rover at a discount. Deloitte actually found that shoppers plan to spend an average of about $90 this year on pets, and that might be their own pet, that may be a friend's pet, but it shows that there's really an interest in looking for pet merchandise, both online and in stores.
Okay, time for today's numbers round. Let's kick it off with 130. More than 130 Secret Service agents have been ordered to self-isolate after testing positive for COVID-19 or coming in close contact with coworkers who were infected themselves. That's according to the Washington Post. The outbreak of the virus has now pulled roughly 10% of the agency's core security team. The Post reporting also found that the COVID spread within the Secret Service is likely, at least partially, linked to President Trump's many campaign rallies that he held in the weeks leading up to the election. Next, $149 million. DoorDash, the leading food delivery company in the U.S., filed its S-1 today with the SEC. And S-1 is what Wall Street calls the financial disclosure paperwork that a company fills out before it has an IPO. S-1s for buzzy tech companies like DoorDash are hot commodities, both for investors and journalists. I mean, everybody wants to look at the books. So what did we learn? DoorDash brought in $1.9 billion in revenue in the first 9 months of 2020, but it didn't make any money. In fact, they lost $149 million. But the company's losses are getting smaller. Over the same period in 2019, DoorDash lost more than $530 million, and that was on $587 million in revenue. And finally, 300,000. Twitter says that between October 27th and November 11th, it labeled an estimated 300,000 tweets as either disputed or misleading during the 2020 U.S. presidential election. That amounts to about 0.2% of all tweets sent during that time. Of those, 456 tweets were covered by warning messages and had engagement limited, meaning that users couldn't retweet, like, or reply to those posts. The labeling was part of what Twitter calls its civic integrity policy that was intended to stop the spread of misinformation during the 2020 election. The platform expects to release more details on its handling of the election early next year. That's it for After Hours, but before we go, here's one more thing to watch going into the weekend. DoorDash isn't the only Silicon Valley darling expected to go public before 2020 ends. Sources tell CNBC that we should expect Airbnb to file its all-important S-1 early next week. These are household tech names that experts expect will gin up a lot of investor demand. So get all the latest details on their public offerings by going to CNBC.com and downloading the CNBC app. We'll be back here in our home office every Tuesday, Thursday, and Friday with a new edition of After Hours, so be sure to catch us then.